All right, good peoples. It's Bruce with Targeted Wealth Creation back here at you for Coney updates after Thursday 5:15 trading, and we go into payouts for tomorrow for Group A. All right, Coney is in Group C, so we got a little time, and I wanted to give you some technical analysis. So, one of the people asked in my comments on Pulte, "Oh, I watch another channel also. It'll be interesting to see your stuff." So, let me just paint. Yeah, there's some people out there that go into great detail from an accounting and a forensic accounting basis of each and every transaction. I generally track all that because you really need to know how they do it. But from a reporting perspective, I'd rather tell you what's going on in the markets. My expertise is 40 years of trading the markets, making enough money to retire. I'm a multimillionaire, been retired. Um, I do this YouTube out of, you don't see me asking you to send me money for coffee and do this and do that. I've actually taught a few people privately, very inexpensively, how to do options, right? And understanding options and all the rest. But they've approached me. It's not something I have a formal class on a website. So I'm just trying to differentiate. You should watch as many people that tell you forecast. But if you want somebody who's market savvy and who's been there, done it, doesn't work a full job. I did all that. I was an executive in a business development role for a major company, right? I made millions, lost millions when the tech boom busted in 2000. And that's when I sort of discovered the commodity cycle, the super cycle that happened during the decade of 2000. So I think that is also, if you notice, I have a propensity to come in and do metals and miners. From a YouTube perspective, it doesn't do very well because I'm not yet known for that. A lot of you watching it are still doing this. I love options. So doing this stuff around Coney and Misty and Pulte, but I also was in software and hardware for many, many years. So I was out telling you about Palantir a year ago and saying, hey, they're launching it. You really ought to get in that fund. Whereas people now, other YouTube, oh, it's the GOAT, it's doing that. Yeah, but they don't even understand. It's like calling GDXY gold. Oh, yeah, that gold ETF. Well, it's around the gold miners. There's a big difference in saying gold and gold miners and precious metals. So, you know, when you watch somebody, watch them and understand what you're getting, right? I would never tell you, I nailed Tesla at 76 cents, exactly what they're saying. I don't think anybody else did. But sometimes there's more luck than there is knowledge, right? So I'm not going to sit there and tell you, don't pick somebody based on whether they're accurate or not accurate. Listen in terms of an estimation for an individual payout. Like them for what they are. There's guys that report on 4, 5, 6. I'm not going to do that, but I'm going to give you extensive stuff when you get into miners, and I have a full database on that. So anyway, I just wanted to make that because I start to see that in my comments. Um, but I know when I was looking to retire in Asia, I was watching 5, 6 YouTubers, who were talking. And but everybody comes from a different perspective. Just understand, I'm in my 70s. I've been was trading and investing for 40 years. I took my first options course. I spent about 4,000 for the course, for a 3-day course. I learned a hell of a lot. I do something like that. I'll teach somebody for an hour in 3 sessions at, $100 an hour for $300. They're going to learn everything I learned. Now, implementing and doing it right after that is where the skill set comes in. And honestly, if you spend enough time in YouTube videos, you could understand it. I did some options 101 and back when I started my channel. But anyhow, I tend to report on what I love and what I invest in. So FYI. All right, let's get into Coney. So Coney is in a unique situation. It's in Group C. It declares on the 28th. So we've still got we got all of next week and this week to finish collecting, and then that's going to determine what they're going to pay out. This thing, just FYI, you understand the power of a little bit of movement. We were up around what 268, 263, I think was the number. And this was showing 67 million that it purely was collected. Well, we had to sell the puts. I'm sorry. We had to sell the calls and buy the puts to create that synthetic. And there's some cost to do that, right? Because the calls cost way more than the puts that we sold. So you have to take that into consideration. But literally, just on the value of what's the price right now when you sell it, it went from being a positive 67 to a negative 22 in basically a 20-point move, right? 263 to 244 down. Why? Because this is priced at 250. Anything above it, the call is going to be worth more than the put is. Anything below it, it's the opposite, right? Where it's 16 and 21. So it has time because it's out till June 20, but they can't sell it to collect more revenue to pay us a dollar plus right now in this situation. But you also have time. You have another week beyond the one more trading day because I'm reporting after Thursday's activity. All right. So what did they do? All right. Now let's go in here to coin. They really didn't do anything fancy in terms of even the synthetic. They left that alone because we're close enough to 250, they're going to let it ride. But they had 600,000 shares bought, guys. That's where some forensic accounting matters. So they have to go utilize that money, they have to put that money to work. So all they did on these spreads was they bought to close the 265. Right now, with 2 days, it's unlikely it's going to go back to 265. And they sold those calls. So they want to take them off. And when they sold them for like five something. So they took them off for 78 cents. Smart move. I like to see this now that I'm covering it. Same thing here. So they took 11,080 and then they took another 55.47. They bought them back for 78 and bought some more back for 65. So that's making money. And on the insurance ones that they have to buy to protect themselves if it runs up to 280 or some high number, so they went and sold those. Now they had paid $3, so they're only collecting 29 cents. So that's the kind of mentality. That's what happens on these spreads. And then they put one new spread on, right? But they went out to 523. So they want to prepare for next week because there's only one more trading day if they're doing this during Thursday. All right, guys. So that kind of shows you what new trades were put on, and that's not important to go through every little detail on that. All right. So here's our current environment. These are the calls that are sold, and actually, these guys are now, I should highlight just the text. All right. To let you know what matters this week and what doesn't. These are all the sold calls as part of a spread, and these are the bought ones. Okay. So these should generally work out, except for the fact, see, the delta is 16. It's normally 0 when you add all these versus these, but that's because they've sold some over here and they haven't spread out the bought calls for insurance yet. They have time for that. All right. So as we move through, this gets updated. We were looking much better, guys. We've sold these. On the 200s, they did a great job. On the active 250s, this flipped on us, right? Remember I said this was 67 in value, and then we had some costs, so it was showing us like a $21 million profit. Now, all of a sudden, when we add that cost of 47 million and the fact that it's underwater, we've got a 51-cent paper loss. Okay. These were spreads that were closed out, but the spreads we close out today, they netted us. Here they are down here. So we bought back the sold calls, and then we bought back, or sorry, we bought, let me get this right. We bought to close, we bought back the sold calls. That got us, um, yeah, I see what I did. All right, but the numbers are right anyway. So both of these pairs got us 11 million, but then we had to buy back um, to close. We had to sell the ones that we bought, the insurance one. So that led us to another 5 million net, right? So we collected 11 million all on all the ones we sold and bought back really cheap. And then the insurance ones that we had bought, we needed to sell those, a portion of those. And so that netted us. But see, it's only 4 cents because look at this. Look at this big increase here. Only because I track it. 600,000. So almost 4.5% of new shares. Why? Because people are seeing Coney has been flying up, right? But don't always confuse flying up with Coney getting the money, right? And that's why there's room for reporting and people to do the forensic accounting and all that kind of stuff. So I will just say this, and this is where I bring something to the table. I haven't seen another. There's YouTubers that do nothing but just technical analysis and tell you what to buy, but they're not going to do forensic accounting. I'm not only doing the forensic accounting, but I'm also in here telling you what's up. So yesterday I talked about the Coney chart, but even bigger and more important because of the volume and activity is the coin chart. Okay, because that's what all the options are based on. That's how Coney makes money, but it doesn't perform exactly like it. A lot of that is dependent on the fund managers within YIELDMAX. But let's go through what I see here, and I think this is important. So we set up a pattern. Sometimes people call it a cup with a handle. I like the inverse head and shoulders because I talked about it up here. A head and shoulders is where your head's on top and you got two shoulders and you draw the neckline down below and you say if it drops below the neckline, it's going to fall the distance, right? So what you do in an inverse, I just squiggle the line, but I could draw, an angle line here across these guys, close enough. And you look down here and you say, this is 145-ish. This is around 218. So this needs to get changed. So when I measured that, I got about, 73. And so then you add that up to the top and it shows around 291. So it says based if this pattern plays out, we will get to 291 as a minimum and then whatever takes place there takes place. All right. Well, sure enough, we got the gap up above the neckline. But what has happened? Technical analysis tells us in many times a gap gets filled. Well, even if there wasn't a gap, let's say that we moved up a little bit, moved up a little bit, moved up a little bit. Breakouts sometimes just continue up without coming back and testing. But what actually happens in technical analysis, probably 50 to 60% of the time, the breakout comes back to retest the breakout. You don't want it to go down and close for multiple days down below because that invalidates the breakout. So I think it's particularly interesting. I'd like to see us, and remember, again, the markets dictate this as well. What's happening in the NASDAQ? You know, if the NASDAQ were to sell off hard, which were very lofty levels, we could easily pop right back down here to 218 to 220. It doesn't mean it literally tests a line to the exact number. It may just come to 225 and say, okay, boom, and take off again. So I think over time, it's funny, I'm a little negative on the markets. I'm thinking this B wave is seen as length, but I'm also seeing a lot of cup and handle patterns that could play out. Now, if we come down here, close at 220, go down below that, and 4 or 5 days, a week goes by, then this pattern is what you call invalidated. But if it just sideways over here, it could go back up and reestablish even with this. But then your neckline becomes higher, and so that's why it's considered invalidated. Another thing to look for, you want your volume in the up move bigger than what you get your retracement to test the neckline. So we got the 40 million up here. We're back at around 21 million or so. So if volume stays low and we just drop as a natural order of dropping, then this sets up for a takeoff. So whether this payout is the one that really does the job for us or not, I mean, remember, we're an $8. Here's the numbers I should have told you. So minus 720 percentage on the drop from 263 to 244. 5% where we went from what was 877, I think, to 824. So this is nice. Whenever, you know, the old adage is we don't typically in a hard down market, we go about 90, 85, 90, 95% the same. So you don't have a lot of protection on the downside in these income funds. And you have the ability to move up, but sometimes, unless the spreads are placed just right and everything, you may only get a third to a half of the big up move. And that's exactly what we saw when coin broke out. We saw it up like 23% and we were only up like 10%. So that, but the fact that you get income, you know, but people always say, well, Bruce, which one would you do? Well, I choose to do both because I can write some of my own options or not choose not to and just own the underlying and tweak it a little bit. You know, there's all kinds of additional things when you're good at options. You understand this stuff. Um, but that's what I like Coney. If you're going to buy a YIELDMAX income fund, buy it, DCA in it, add when it's extra low. I wouldn't just, you know, if you're going to be in this thing for 30 years or 25 years to retirement, first off, you ought to be in more growth than you ought to be in income to begin with in a 401k. But if you're going to do it, and you're going to own this, then you can just see on the chart that this thing is so much better set up when it's out of favor, right? Whether this one plays out perfectly or this is Coney. You know, this is a classic double top. Now, if this would have traded sideways over here, and consolidated, you'd have a great cup and handle, and then that thing could measure from, you know, $13 to 30. So you're looking at adding 17 and project out to 47, but it didn't, right? It did an A. Its B wave retrace was weak and probably finally bottomed over here. I do think that that's very close. And remember, even in a negative market, Bitcoin related things. You know, if the market sells off hard, I don't think that gold and Bitcoin, digital gold, are going to go down that much. I think we're in this commodity super cycle and they're going to heat up. So that's where I have most of my money is crypto oriented and gold and precious miners, right? I do a video on that stuff and I get 300, 500 views. I get a couple thousand when I do a yield max. but I know what's going to do really well, and gold and precious miners are going to outperform over this next 3, 5, even up to 7 years, in the rest of this decade and early into up to like 2032. So you're going to see just outperformance, and it'll be a super cycle, commodity cycle. Um, so make note of that. Look at some of the stuff I'm telling you about over there. I get it if you haven't woken up to that, but by the time you woke up to that, half the move, we're already in the fifth inning, right? So you're buying things. I wouldn't say you're chasing it, but you're buying it with only half the gain. So if something's going to 20x, or more fairly, the big guys, the stable guys, you're going to get a 5x during the whole bull run. Well, you're only going to get a 2.5x. For those of us that got in early, we're going to see all that. All right, guys. So that's what I got for you. Let's hope for the best here. The best thing that we can do for the rest of this week is we want to climb back up. A perfect scenario, and I don't know if that's going to play out in the charts. We may continue lower. Um, we won't be hurt any more than right where we are, except for on that synthetic. But in a perfect world, if you want to know what you don't root for, you want 255 to close the week at 254 and a half, so that all these things are worthless, all these sold. Insurance was just already paid for. These don't matter. They have another week to go. Um, so that would help us a little. And then next week, but honestly, kind of based on this chart, I'd like to see this drop get over with and come back here. That'll freak out a lot of people, right? All the people that chase this big up move. But the smart money says the probabilities are that it comes back and closes the gap. Doesn't mean it will. All right, guys. This is Bruce with Targeted Wealth Creation. That is it for my analysis today on Coney, with 1 day left in the trading week, and I'll get something out on Pulte soon. Pulte will definitely be interesting. All right, guys, not financial advice. I'm not a financial advisor. Bye for now.